What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button. If you haven't already, hit that subscribe and notification buttons as well. That way you're notified when we release new videos. We do release bonus content from time to time, so make sure you're alerted when we release those. Now, the nightly and weekend videos like tonight's video mostly focus on identifying triggers and targets for trades ranging from scalps and short-term intraday trades all the way up to long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts, the levels that we have, the broadening formations, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that'll dive deeper into that for you. And then if you are not familiar with the STRAT, which is the base of our charting and trading method, you can find the link to a free PDF quick reference guide in the description of this video. The document is quick reference, everything you need to know to understand the basics of the STRAT, right? So understand those, reversal patterns and things of that nature. Very simple to learn, very simple to pick up, but it is the base of our charting and trading method. So, let's get to the video at this point. Check out the agenda for the day. Hang with us through the whole video. We do, go over short-term targets and triggers, but we do go over all time frames. So we give some pretty good insight. Excuse me. Let's get into the agenda. We'll go ahead and recap the price action from today, Wednesday, February 25th, before we zoom out and look at the week, month, quarter, and year price action. Then we will zoom back in to set the 4-hour markers and the triggers and targets for Thursday, February 26th, and we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. All right, so let's get into the charts, starting with the 5-minute chart. This is the way that we can capitalize on our proven and repeatable strategy early on in the day, right? Very, very early after price opens up. This strategy allows us to profit from short-term short-term scalps, but it'll also it can also provide early entries into longer day trades, right? The intention is for more of a scalp type of play, but if targets are reached and there's still momentum, there's no triggers back to the downside, then obviously you can ride those contracts through the rest of the day. So today we had an example of really a couple of different things that happened this morning. Kind of a hard entry early on. Then we had some nuance that had to be used, and just basically looking at where price was in relation to specific levels that we have on the chart, and then the proven and repeatable strategy came back into play. So looking at the charts, we have our opening print here at 70.88, and was it 70.88? 70.89, I'm sorry. And it just went straight up, basically, right? So you could have done what some people call a Stevie Wonder trade. No look from the beginning, from open, just buy the call. You could have done that based off of the gap up that we had. Wasn't a huge gap up, so risk to reward was there. Even if you did allow for the gap close, it wasn't that large of a gap to close. Based off of where things could go with the gap close or gap fill reversal back to the upside. It could have fit your risk to reward profile. Also, if you wanted to look at the 1-minute chart, we did watch that this morning. There was a higher low right at opening or just a little bit above opening print. That was the trigger on the 1-minute time frame. We like to mostly wait for the 5-minute. There was a couple of times, 2-3 weeks ago, we used the 1-minute just after it showed basically 3 or 4 straight days of early morning pop, and then nothing much else afterwards, that we decided to kind of try and play that early morning pop on the 1-minute. But back to our normal strategy, right? Just dealing with the 5-minute and above. And the proven and repeatable strategy that we're talking about is very simple, right? It's buying calls if you get higher lows at or above opening print, and it's buying puts if you get lower highs at or below opening print. Opening print being the first traded price of the day, right? So you can see here we pushed up, we got a higher low here, and we actually did buy a few contracts, right? With the going above this 71.98, we not only have gone 2 up on the week, but we've gone higher high on the week, coming from a higher low, so continuing that uptrend. And this 71.98 is, this level is in green here because that is excuse me, last month's high. So we not only went 2 up and higher high on the week, but we went 2 up on the month as well. So you know, those are definitely both bullish, and especially following a gap, looked like it was going to be a gap and go. We went ahead and entered, right? Now this is an example of when the trade does not work out, when the strategy does not work out, right? There's no strategy that's going to work 100% of the time. Well, there are strategies, but you can only use them once in a blue moon, right? It's not something you can use every day. If you want a strategy that works 100% of the time, then, you know, you need to look at a different strategy other than just day trading, right? That's just the long and the short of it. So the key here is, if it doesn't work out, to take as small a loss as possible, right? And to do that, we have to get good position. So we got this lower high here, and as soon as this 2 up went 2 up to make this a higher low, I said lower high just a second ago, when we went 2 up to make this 2 down a higher low, we needed to entry right at that price point, right? So as soon as we went 2 up, we enter. We push up, we make the higher high, things are looking good, but then we have, you know, kind of the bottom drop. I don't even want to say the bottom drop out, but just a big candle to the downside, right? And what that did is, you know, basically we're looking for a higher low at that point, right? If we want to continue to the upside, we made the higher high, we need the higher low. We thought we might have had it here, right? If this would have been the end of that push down, then we would have been, you know, okay, getting back to the upside, just a higher low here. But we went below this low, and that was our exit point, right? So went ahead and exited there. Not too big of a loss, a little bit bigger than, you know, the past few losses that we've had. You know, I think it was a week or so ago, and a little, you know, like 3 weeks ago. So from that standpoint, not exactly thrilled. It was a little bit bigger of a loss. It was what, 72.17 down to 71.55. So, you know, 60 cents worth of price action on SOXL, with the spreads being the way that they are. Ended up taking a little bit more of a loss than we wanted to, but not a very big loss at all, right? And what it did was alert us for, okay, are things going to start to turn around now? We went 2 up on the week. We went higher high on the week. We went 2 up on the month. Are we going to get some type of pullback here, and then a higher low to continue this uptrend, right? And what we were looking for is how we were going to resolve price action at the last month's high. And you can see here, we ended up putting in a lower high. So we did enter puts here, looking for opening print, essentially. If we got anything more than opening print, that would have been great. But, you know, opening print was definitely the first target. If we got below opening print, obviously the gap close would have been the next target. But the main target for this move, just because we're in the face of an uptrend, was opening print, right? You don't want to have too high of expectations of downward price action if we're in the middle of an uptrend, right? So keeping that in mind, we went ahead and entered puts here with the lower high. Now this doesn't exactly play into the proven and repeatable strategy. This is where the nuance comes in, right? So the proven and repeatable strategy is kind of out the door here, because yes, we are making a lower high, but we're above opening print. Excuse me. The reason why we entered these puts is because of price location, right? That was the major point that we needed to get to was at 71.98. So it's perfectly reasonable that after, you know, just ticking barely 2 up on the month and higher high on the week, that it could be a little bit of a trap for short-term bulls, right? They see we've broken above this specific level. This level has been out there for a long time. We're not the only ones that know about it. So once we break above that, that does entice people to jump in. Maybe the market makers had a little bit of fun and, you know, pulled back a little bit, right? But either way, we were able to capitalize off of that just based off of trade location and principles, right? You went lower low, lower high. We're starting a downtrend if we get a lower low. So get that earlier entry. You could have waited for the lower low to get in there, but obviously that leaves you a little bit less reward there, right? A little less risk, but a little less reward as well. So we went ahead and entered puts here. We rode this down. we took profits actually pretty quickly on a majority of our position at opening print, right? We didn't want to play around with that position, but we did leave some runners, and we did get the lower high, higher low, and as soon as we went 2 up on this candle to lock this in as a higher low, we went ahead and got out, right? If this was going to be the start of the bounce of the uptrend back to the upside, we didn't want to lose any of that profit that we had lost, especially because we took that small loss early in the morning, right? So ended up profiting definitely much more to the with the downside move that we were participating in, as opposed to the calls that we were in that went against us, right? So not that big of a loss. Decent profit here, obviously made up for the loss and then some there, but because we got that higher low, higher high, we were then on alert as to, are we gonna is that it, right? We're not going to close this gap and we're just going to continue to push upside. If so, obviously that's bullish. Had some more playing around here that was done, but then eventually got this higher low that broke to a higher high. So once we got this higher low and this 2 up, went 2 up to mark this as a higher low, we went ahead and entered at that point, just like we did up here, right? Same type of entry. As soon as this went 2 up to lock this in as a higher low, we went ahead and entered. So it was the same thing. We locked that in. We pushed up. We did get this little lower high right here, and we exited half of our position here. Did leave some out there because overall we did feel the day was more bullish than bearish. If we take a look at internals, QQQ internals, right? If we just look at that, vol QD was trending up all day. 80 QD did drop in the morning, and that was that early drop, but then it was trending up the rest of the day. The tick never even really went below zero line until the end of the day. A little bit of wicking down below zero line there early on when we had that drop in the morning, but other than that, stayed above zero line. So no real reason to get bearish in this case, right? And so that's why we kept those runners, and eventually pushed up. After we started playing with this that 71.98 level too much, we went ahead and just took off the position, started to get towards the end of the day. Didn't want to get caught in any type of sell-off before the NVIDIA earnings call or anything like that. So just went ahead and took profits there. So overall, definitely good profit to the downside with that move, good profit to the upside with this move. Small loss here early in the morning, but overall green day. And down here, another reason why we were able to get in was because it was a higher low on the 15-minute chart. Let's pull that up. 15-minute. All right, if we look at just today alone, right, this was a higher low on the 15, right? This was your initial higher low, but then followed by a lower high. So if we would have went lower low here, then obviously we would have been starting a downtrend. But with that lower high, ended up making a higher low, and that was another part of that push to the upside. All right, on the 1 hour, we didn't even do anything really as far as trend is concerned, from the standpoint of we have not put in a higher low yet. Let's go to this. There we go. We have not put in a higher low yet. So yes, we did pop up, make that higher high, and I guess we can consider this as a higher low in general right here. It was kind of lower low, higher low, whatever, but we made higher high, and we have not yet pulled back enough to go 2 down and then 2 up to lock in a higher low, right? We've started obviously these two downs in the last 2 hours of the day, but we never got that 2 up to lock these in. So there could be more downside tomorrow. I do say that because we are down, about a little more than 1% here today. Again, obviously, the NVIDIA earnings call is over. We did listen to that call after hours today. It wasn't too bad, but it wasn't like, oh, we're about to go make $90 million next or the rest of this year into 2027 based off of X, right? And actually they were saying that they weren't seeing any money as of yet with the chips that were approved for China. So it's kind of hard to say still what will happen tomorrow. Once retail jumps on board and it's not just overnight trading, we may see something different. We may see that pump again. But initially when the numbers were dropped, there was a pump, and then starting with the call and now after the call, price just continues to trickle down to the downside. So let's see what we're at, 71.10 That brings us back down here. So say we do open down here, but then, retail jumps on and ends up pushing price higher tomorrow. Then, obviously that's going to be a higher low on the 1 hour time frame, and the 1 hour uptrend continues, right? On the 4 hour, nothing to really say here. We didn't put in any type of higher low yesterday. We just continue to push up, right? So not much to say there. Looking at the day chart, let's get something cleaner here. We do have this gap, which we showed with these little teal boxes, right? Here's the gap down here as well. So we do have the gap still from this morning's open. Do we fill that tomorrow? And if we do, is it that big of a deal? Probably not, right? We've got a good distance to go back down to 63.50-ish area before we would create a lower low. And even if we did create a lower low, it's coming from a higher high. So all it would be doing is making a broadening formation. It wouldn't be making a downtrend. So a pullback wouldn't be the worst thing in the world, especially if it's to fill this gap before continuing higher, because what they say, all gaps like to get filled. So you don't want to just leave gaps behind as you continue to the upside, because at some point you'll get a pullback to fill those. So if you can fill those while you're there and then continue moving up, that's definitely more bullish, in our opinion. But that's where we sit with everything. Not a whole lot to say. We're still technically in that range that we've been in for weeks, right? We're at the top of the range. We're in the look above and fail range, right? Because actually we've been talking about the range being up to about 70, 71 maybe. But we're above that 70, 71 area, just like we were over here a couple weeks ago before failing back into this range, right? So is this another look above and fail back into the range? We've really got to see. And that's why we wanted to go in pretty flat into close today. Just let things, just be patient. The market is always going to be here. And so you don't need to be in on every single play. And it's actually probably better if you're not in on every single play. You can, assess the situation a little bit better, take your time with things. So just wait for tomorrow, right? We'll see what happens when retail gets involved. And we're down 1% right now, but that really has nothing to do with anything. Once Asia market opens, which UK market opens, that could be that fuel to push us back up in the overnight. And we could be opening back up with, who knows, a gap up in the morning. So that's why I don't want to get too heavy into the analysis tonight. We'll just kind of jump through these the time frames pretty quickly, and then get into the triggers and targets for tomorrow, and just basically leave it at that. We'll have to wait for something to trigger tomorrow. Obviously we're in the longer dated calls. We do have calls for March. We do have calls for July. We have calls for January 27. We have calls for January 28. So, any continued upward movement is fine. We don't need to necessarily participate in that on a daily or a day trade perspective, right? If we're still getting that gain on those longer calls, right? So that's where we're at with everything up to through the 1 day chart. Let's zoom out a little bit more and take a look at the week. And this is what I was talking about as far as today's price action going above that 71.86 level. We went 2 up on the week, obviously early in the week, but we ended up going high in the week, right? So the last high on the week was 71.98. Today we obviously went above, going to 72.36. So we have this higher low and then higher high. So from the week perspective, nothing to really worry about, right? And we've been saying this for a while. We've been cautious, but there's nothing that's broke down, right? We've had this bull flag. This here was the bottom in April. Here's the flagpole, there's the flag, and we've exploded from there, right? We played around at the 200 fib extension for a little while, just like we did at the 100% fib extension. Then we pushed up to 138.2 and through, right? So here we were playing with the 200% fib extension. Now we're pushing up to that 238, and are we going to push through like we did back here? We'll have to see, but we did make that higher high. And, even if we do get a pullback, it's not going to be the end of the world, because we'd have to come all the way down here to this $49 level to make a lower low. And sideways action is it's, I don't even want to characterize it, right? It's neither bearish nor bullish, right? If anything, I would lean bullish, just because it would seem more like bullish consolidation at the highs. But, sideways action, we get into a range. We just play it like we have been, right? Just playing the edges. Let's zoom out to the month. Looking at the month, again, we went 2 up on the month. So that threat of the 1, 2 up, 2 down, The immediate threat is off the board. Now, could we have a one combo 2 up, 2 down, or one combo 2 up, combo 2 down that triggers? Quite possibly, right? We had a one combo 2 down, combo 2 up trigger on the quarter. So it's not like we can't have those combo strats. But the immediate threat of the 1 2 up, 2 down is off the board. Even if we do make a bearish engulfing candle. Now we only have till the end of the week to do that, so 2 more days. But if we were to fall all the way down to this $45 area, we would have a bearish engulfing candle, but there would just be the opportunity for a 3 2 down, 2 up back to the upside in the following months. So right now, again, bullish, nothing's breaking down, neutral at worst. Yeah, that's all I've really got to say there. The quarter I just talked a second ago about how we did a 1 combo 2 down, combo 2 up. We've reached that strat at 70.08. We had that pullback after we reached strat, and now we're pushing back up. So nothing breaking down from the quarter. On the year, we had a 2 down last year. Early this year in January, we went 2 up. So we've got the 2 down, 2 up reversal. Magnitude was 70.08 as well. We ran that strat. So high time frames, there's really nothing to worry about. Yes, on these shorter time frames, the day and under, really 4 hour and under at this point, we've got that volatility, but there's not a whole lot from the standpoint of the week and above that I can point at and say this is weak, right? That's just how we see it. Anyways, let's get into how we will approach tomorrow's trading, right? To do that, we need to make sure that we have our 4 hour chart, 4 hour markers on the chart. Those 4 hour markers are overnight high, previous high a day, overnight low, and previous low a day. There is one more, and that's the opening print, but obviously we can't put that on the chart until price opens, right? So as of right now, this is where we've got our range. Let's say, screw it. Let's just say we open in the middle of the range, right? If we open in the middle of the range, it doesn't change much other than, risk to reward as far as the targets, right? The trigger stays the same. From a scalping perspective, if you get higher lows at or above opening print early on in the morning, look to get into calls, targeting previous high a day and overnight high. Obviously, there's not a lot of magnitude there for previous high a day, so you're probably not going to let any contracts go there. But that next target would be overnight high. Now you reach overnight high and you've got some more momentum. We continue to the upside. We can turn and look at our triggers and targets on the 4 hour time frame and the 1 day time frame, things of that nature. But for this particular strategy, early morning scalps or early entries into day trades, higher lows at or above opening print, targeting previous high a day and overnight high. If we open here and we push down, then we want to look for some type of lower high at or below opening print, targeting overnight low and previous low a day. Obviously, we've got the gap down there from yesterday. So if we do get to previous low a day with some momentum, you do want to look out for that gap close and see where that ends up. All right. So that's what we've got from a scalping perspective. Let's zoom out a little bit more here and take a look at things that, from more of a swing trading perspective. Excuse me, day trade, swing trading perspective, short swing trades. I'm trying to make this bigger for everyone on phone. There we go. So you can see we have the range that we've been trading in. You can see today's price action was a 2-1, so a 2 up and then an inside candle with the gap below. So on the 4 hour time frame, if we go 2 down in the first 4 hour candle of tomorrow's price action, then we have a 2-1, 2 down reversal, entering at the low of this 1, exit being the low of the 2 up to the left of the 1. Again, gap below, so could have some gap close, but from a strat perspective, your entry is here and your exit is here. Right? Same thing to the upside. Entry is at the high of the 1, exit is at the high of the 2. Obviously, not as much magnitude to the upside. All right. Let's take a look at, and the other thing I wanted to mention, if we go to the downside, if we do reach magnitude, this 2-1, 2 down, we get into this gap. As soon as we poke down below previous low day, that does technically trigger a 1, 2 up, combo 2 down, right? And that magnitude is not the low of the 1, but this is the low of the candle to the left of the 1. So that would be a pretty big pullback in terms of the magnitude of that move. Now, keep in mind, we are in an uptrend, so it doesn't mean that strat would totally play out But that would be what is on the board for, as a possibility. All right, let's zoom out to the day chart here. And again, still in that range, up at the top of the range. So what are we going to do here? Are we going to look above and fail? Look above being that little poke, that little wick above here. Are we going to just automatically go 2 down tomorrow? Do we go 2 up tomorrow and then Friday maybe we go 2 down for the look above and fail? Who knows? But we are at the edge, so this is where you want to get ready to make your plays, right? Once you have some type of confirmation, some type of high or low or something like that over previous high day, okay, start to look to get into those calls. If you get some type of lower high at or below, previous high a day, especially if it's below previous low a day, then all right, now we're looking at going back to the middle of the range at the least, the week, which is where the week flip is 65.85. And then, at worst, we're going back to the bottom of the range. Again, we only got 2 days left in the week, so, temper your expectations, but those are, that is what's on the board, right? I think it's kind of enough of the charts right now. Let's go ahead and get into the notes. Look at the hard numbers, right? So for Thursday, February 26th, there will be 214 trading days left in 2026. And we know the close price on Wednesday, February 25th was 71.86. We know for the week to flip red, we've got to go to 65.85, the month 59.51, and then the quarter and year, we've got to get all the way down to 45.13 to flip those red. So right now we are in full time frame continuity. The week, month, quarter, and year are all green. Advantage bulls, right? The expected move for the week was plus or minus $9.08 at the close of trading on Friday, this past Friday, giving us an expected range of trading this week between 76.19 and 58.03. Getting a little bit more towards the upper part of that range there, but still got a ways to go, right? We know there's no gaps above. We know there's a new gap below from yesterday, but we always keep track of all the gaps, so those are all the gaps that we've got below us. And then we know from a scalping perspective, we're looking for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. All right, we talked about on the 4-hour time frame, if we go 2 down in that first 4 hour, that gives us a 2-1-2 down, triggering at 72.11, magnitude being 70.48. If we get to that 70.48 and start to go lower, then that does trigger the 1-2 up combo 2 down, which would take us down to the 70 flat. And if which is the gap close as well. But the target would be the gap close. First target would be gap close. The magnitude of the 1-2 up 2 down is 66.35, right? So that because it's such a big move, we've got these intermediate targets. And that first intermediate target is obviously the gap close. And then we've got a couple of more of them listed out here for you as well. To the upside, if we go 2 up in the first 4-hour candle of Thursday's price action, that does trigger a 2-1-2 up at 72.11. 72.36 is the magnitude. So again, we talked about not a lot of magnitude to the upside. If we do push past that, though, remember 74.21 is all-time high, so that would be our first target. Then we've got 75.65 as another blue sky territory target for you out there. On the day, if we go to the downside, right, if we go below Wednesday's low, that triggers a 2 up, 2 down at 70.48. Magnitude of that move is 66.35, but again, we are in an uptrend, so that's a pretty big move. Just in case we don't make it all the way down to magnitude, there is our intermediate target here at 68.44. And then if we do reach magnitude and continue to push lower, we've got some extended targets listed here for you as well. If we go to the upside, that gives us a 2 up, 2 up continuation, triggering at 72.36. First target being 73.15. Then the all-time high of 74.21, and we've got a couple of blue sky territory targets out here for you as well. We talked about on the week, we triggered the 2-1-2 up, and we are still in force. That's why it's still bold, meaning we are above the 68.22 trigger, right? We did reach magnitude, so actually we should cross that out, strike through, there we go. And we actually reached that target as well, right? So our next targets are 73.15, all-time high of 74.21, and then some more blue sky territory targets out here for you as well. On the month, we did trigger the month, the 2 up on the month, but we are no longer in force, right? The trigger was 71.98. We closed at 71.86, so we're not in force. We're not above that level, but we did still trigger it. That's why it's underlined. Once we're back in force, we'll put it in bold, but at least we know it did trigger. Triggered at 71.98, and we've got the extended targets out here for you, including that all-time high, right? And we talked about in the quarter, we already ran the 1 combo 2 down, combo 2 up strat, and the year we ran the 2 down, 2 up strat. So we're just waiting around on those time frames for something on the smaller time frames to trigger, right? So there you have it. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. We hope you enjoyed today's video. We try to jam in as much information in as possible without taking up too much of your time. Did speak a little bit quickly on today's video because we've got some things we got to get to here after we get done recording. So apologies if it is a little fast. If it is, just slow down that play speed or hit that rewind. But we just wanted to put out this information for you guys, help everybody out, especially with NVIDIA earnings after hours today. So if you made it to this point in the video, go ahead and give it a thumbs up. Really helps the channel out, and we do want to continue to say thank you to those who continue to tune in and give us a thumbs up and drop comments and everything like that. It really gives us a sense of community and that what we're doing is something that's right. So we do appreciate those who continue to tune in and are a part of our community. If you think this can help anybody, go ahead and share it as well. But at the very least, a thumbs up goes a long way. It's a free video. We're a free channel. We don't have any memberships or anything like that. So all we ask is for a free thumbs up, and we'll kind of leave it at that. So we'll wrap the video up like we always do. If you're watching this Wednesday night, we hope you get some good rest tonight and wake up refreshed tomorrow morning. If you're watching this Thursday morning or Thursday in the day, we hope you got some good rest last night, woke up refreshed this morning, and we look forward to getting out there and trading with you.